Hello dear algorithms traders, the quote fly with the eagle or scratch with the chickens is a metaphor that is often used in connection with personal success, goal achievement and lifestyle. In our case, it is about either following the big players or orienting oneself to the retail traders. In today's post, we're going to look at why it's better to follow the big players and how we can overcome this challenge. So it's about challenging yourself, taking risks and working hard to achieve your goals, rather than going with the crowd and settling for average results. Before we get started, however, I would like to say a few words that are very important to me personally. As you know, I am a full-time trader and only earn my money with it. In the last 2 years I have produced over 130 videos on my German YouTube channel, which have cost me a lot of time. Since I have been a successful member of the largest trader platform in the world for many years, where English is spoken almost exclusively, I have decided to record my 130 videos completely in English in order to make them understandable for my followers. That was also a not inconsiderable effort. Basically, the effort for a single video is considerable. It's not just sitting down and producing something like most trading coaches do. There is a lot of work behind it, which can often take several days. Take, for example, the video about prop trading. Here I had to research for a few days and had an enormous effort with tax calculations. In the video How the Stock Exchange Works, I compared an elevator with the DOM in order to make them understandable for a layman. In the video Big Player, The Big Mystery, I dissected Goldman Sachs balance sheets and extracted specific procedures from them. Just like the Bionic candle video and ADAs, which took me a total of 3 days of work. Added to this are the many questions on my German and English channels, which I have often answered in great detail. Then there's my channel at Forex Factory, where I've risen to the top 7 Europe creators in 4 years, so I've had to maintain 4 threads in total. Then, in over 300 hours, I supported a friend of mine in trading and helped many other traders free of charge to install the Bionic candle and ADAs free of charge, and in turn answered many questions. I'm happy to do this and help out however I can, but my first priority is trading, which is what I do to make money. It's not because I don't have any more topics for YouTube. You can see, for example, a selection of topics for the next 42 weeks. I just need a little more time for myself, for my trading, for my algorithm trading, and of course, for my family and vacation. For this reason, I will drastically reduce the number of my videos to take some stress off myself. It is also important to me that the videos are of high quality and that they help my followers. How many videos I will produce in the future will depend on how much time and inclination I have. Since I do this voluntarily and free of charge, everyone will certainly understand. But I promise you, I'm not out of the world and will continue to try to offer you quality content. The saying fly with the eagle or scratch with the hens doesn't mean that you should rush to the top and see everything from there while the hens on the ground don't have a clue. This means dealing much more intensively with the big players in retail because they are moving the market in their direction. And why are you doing this in Euro-US dollars? Well, because they have previously collected either the euro or the dollar and then used the retailer stops to drive it into the profit zone accordingly. The whole thing is a very lucrative business since the retailers are usually on the wrong side. First, let's ask ourselves where a retailer gets its information from. The answer is relatively simple: by exchanging information with other retailers on the appropriate platforms. Since only 5% of all retailers earn money from trading, it must be assumed that 95% pursue this activity as a part-time job. This means that much of the information given is completely wrong. There is no information from the big players themselves, since they are networked with each other, and the trading coaches usually have no idea how the big players proceed. And even if a trading coach has worked for a big player, he was usually only active on the official trading floor and has no idea what is happening in the background. The expertise of the trading coaches leaves a lot to be desired anyway. Just look at how they describe a gap. They tell you it's a bullish or bearish gap, which is usually closed. But how exactly such a price gap arises, you won't find it on the internet because most coaches don't even know. Added to this is the fact that almost all retailers have no idea how the institutional or the big players proceed. And now comes the crucial question:
How do we still get the crucial information on how the big players work? And there is only one answer to that.
Unfortunately, only through a clever initiative. For this we need a lot of expertise, mathematics, intuition and of course a lot of time in trading to make the crucial probability calculations that increase our odds of winning. What fascinates me about the big players is that they mislead us retailers so precisely to use our stops to fill their limit orders to the point. For this reason, a few years ago I put together a display where I can see exactly where the weakest retailers get on and off.
Countless screen hours were necessary for this to adjust the corresponding filters.
It is interesting that special gaps appear in this chart, into which big players keep pushing the price. Here we see such a gap. From this we create a zone for a possible short trade and see how the price reacts to it. A short time later there is another gap, and we draw on the corresponding zone. We are curious to see how the price reacts and find that it is rejected to the downside within this zone. This time there are even two gaps that we draw on the chart. The price reacts to the lower zone a few times and then breaks through it. In the middle zone, the price is repelled down and when it comes back into the zone, it reacts a second time. This is the same as with my filtered limit delta orders, for example, which show me exactly where the big players get in and out.
It also took me over 2 years to set the right filter settings.
Or let's just think of my specially created spoofing indicator, which can even look into the future for a few seconds because it calculates a possible price development from the current spoofing information.
We talked about this in detail in my last video.
Of course, the indicator is not 100% correct. However, it is enough if he predicts a correct price development in 75% of the cases. In combination with other information, this can significantly improve the win rate. I also worked on these filter settings for many months to achieve the best result. In 2019, on my blog at Forex Factory, I used my Bionic candle to analyze ups and downs in Eurist. I found that the average down moves were between 29% and 39% faster than the up moves. Since the course history of the Eurist is already more than 50 years old, I have now created a 4 times more detailed analysis. The first basis was a monthly chart, where 126 different movements were examined.
The advantage of a monthly chart is that it shows the movements more precisely than an M1 chart.
The analysis calculates the average pip values per candle. In the first and second charts, we can see that the bearish movements are significantly stronger. The result of the analysis, the bearish movements were 32% faster than the bullish movements. This confirmed the thesis I put forward 2 years ago. If you were to complete your trades exclusively in the short area, you could achieve significantly better results. In this case, it would have been 207 pips more, and the expected value would have improved by 38%. Another point that might speak in favor of short trades is the security aspect. On January 15, 2015, the franc shock caused a downward movement of 2,200 pips within a few seconds. Interestingly, there has never been such a move to the upside. We know that the strengths of the big players roughly correspond to the weaknesses of the retailers. If we take the trouble to analyze and compare the different strengths and weaknesses, there are only 3 points where we retailers have an advantage. Firstly, we can enter and exit the market at any time and don't have to collect for a long time like the big players. Secondly, this is precisely why we retailers can react more quickly. And third, we know that the big players use algorithms to get in and out of the market. With a little effort, these algorithms can be read out and show us the phase in which the big players are. That means we only have 3 chances, and if we don't take those 3 chances, it's our own fault. In any case, I recommend that you work with future data parallel to the Forex market. You can get this future data for a price of €10 per month. Then look for a good exchange software that will help you to filter and read different aspects. You need a lot of patience for this, and of course you have to have fun with it. Move away from the realization that acting on what you see is purely an illusion deliberately initiated by the big players. If I am already able to recognize with my retail software where the retailers get in and out, you can imagine that the big players can do it 1,000 times better. And believe me, they see exactly where you stand. The big players always must take an opposite position to use the stops of the retailers in their favor. Try to put yourself in the position of the big players. They sometimes must collect for hours or days to get all the contracts together. This is exactly why there is an equilibrium, because they collect their contracts. If you want to read the algorithms of the big players, you need either the DOM or the time sales list. All other charts are not helpful for this. Just focus on one thing and start filtering certain things. You must question and check these settings again and again until you get the right result. I know it's a long road, but it will definitely be worth it in the end. I wish you every success, and we will see each other again in the next few weeks. Kind regards, Michael.